Sonia. This demonetization, this is one word which has clearly brought our markets to its knees. What's your sense? Do you think this is a bit of a near-term bear market in India?
Why do you have to start on that note? We could start on the note on whether demonetization has worked or it works and what are the impacts, rather than go straight to the.
No, on that, your views are well documented, Shankar, on Twitter. I think we can play some of the graphics. Okay, your views on that as well, and on the market.
Okay, so let's talk about the fundamentals first, which is the move itself. The fact of the matter is that in all such situations, you have to completely remove the talk and the hype and the chatter and just focus on the data. And the data is pretty clear that most of the cash most of black money is not held in cash. The data varies, but it's like between 5 and 10% of the alleged black money is being held in cash. So to say that all the notes in circulation are actually black money is not entirely accurate. Some part, of course, is. Now, in order to target that, the real question that any analyst of facts and data will ask is whether this is the best way to do that, or are there other ways to achieve the same objective with more limited damage. Now, the deed is done rightly or wrongly. I mean, it is what it is. We can only now analyze the impact, the good and the bad. So what is visible right now, anecdotally, pretty much across India, is that there is a lot of pain, and based on people who are economists and analysts who are doing on-the-ground surveys from pretty much most parts of India, the feeling is that there is going to be significant damage to businesses and to jobs and employment and trade. That, I think, is something we can all accept. Now, the question is really whether that thing gets unwound by December 30th, or does that last longer? Based on what the market is telling me, I think the impact could be, definitely beyond December. I don't think we should be saying that the impact will ease at the moment the cash conversion window closes on December 31st. So, market is basically reflecting that. The other question that arises is, does it mean that, let's say even that there is hard evidence that after 2 quarters, the economy kind of bounces back? The question that is more central is, does it bounce back to the momentum it was building up to prior to this announcement, which is that after 2 years of terrible rural growth and bad monsoons, we had a good set of monsoons. Numbers were expected to look better in the wake of good monsoon. In that situation, we have had this, announcement. You can call it a shock, you can call it awe, whatever you want to call it, but it is there. Now, even if the economy recovers, does it recover back to this pre-announcement momentum? My sense is, having analyzed momentum in markets for decades, is that when momentum breaks, then it takes a lot more effort to bring it back to the momentum that existed prior to the break of that momentum. It is not just a normal situation. You will need to stimulate, you will need to provide all kinds of stimulus for people to regain confidence in businesses. That is going to be costly. It's not without its cost. On the balance, if you look at it very dispassionately, I think the short-term costs are far outweighing the long-term benefits, because long-term benefits, we need to see what happens. But the short-term costs are going to be significant. And I think that is really what the market is reflecting. The tape is telling you the story.
Shankar, hi, afternoon. So that's about the demonetization impact, but what about the markets? Because, I think on the 12th of November, you tweeted that the impact on earnings could be significant, and of course the repercussions on the market as well. But since the demonetization announcement, the Nifty has already fallen about 600 points. Do you get a sense that things could get worse?
Well, I wouldn't say that, if India was participating on the way down along with other markets, then one could say that there is a general problem in emerging markets because of the Trump victory and the strength of the US dollar. But India is standing out. India is standing out on the way down, which is rare for a market like India. India typically outperforms in moments of crisis or moments of great dollar strength. So this time, if you even look at today's Asian markets or even Europe, I mean, they are flattish to moderately up, while India is the only one which is tanking. So now that relative move of India, which I've been seeing for the last few days since the announcement, is not very comforting. It could be possible, and if you look at banks in particular, because they have been they're the single largest component of the Nifty. They are taking it on the chin here, and that to my mind is signifying that yes, there is a flow of deposits into public sector banks. Yes, there could be lower interest rates. I mean, you're probably going to see rates on loans being cut. But is that stimulus good enough to unwind the damage on the large informal economy in India? And that large informal economy in India does buy goods and services produced by the formal economy. So your soaps and your cars and your all kinds of goods and services are consumed by everybody, whether they have cash or whether they have credit cards. That is really my real worry here, that banks may not see credit offtake. So they will have to actually take a hit on margin, because when you are snowed under by large amounts of deposits, and you have no place to park those deposits, you end up taking a hit on your margins. So that for the banks this flow of money into banks is not an unmitigated positive. There are shades to it, and so my sense is banks are not going to be in a very good spot because of this huge flow of deposits. Now, talking about the industrials, talking about consumers, I think pretty much there is consensus that they will be hit at least for this quarter, if not 2 quarters.
Yeah. Shankar,
as I said, whether after 2 quarters you are going to go back to this level, now that's the big question. I don't have an answer to that. Really, I do not.
Yeah. Shankar, your big call over the last 2 or 3 years has been that the Indian mid-cap and small-cap is the best asset class right now. Is that call also at risk? Because, this whole move is impacting SMEs, MSMEs, where cash economy might not be illegal, but actually is quite a large part of economy. So is that call also at risk? We're seeing some of that play out in the recent mid-cap and small-cap underperformance.
In moments like this, Anuj, everything is at risk. So there's no point in nuancing it too much at this stage. When the dust is still swirling around, when the dust settles, my take is, and continues to be so, that many mid-caps, which are down 20%, which are down maybe 30%, are still excellent bets. As I have said repeatedly, I do not think large caps are the place to be in, and we have discussed this many times on your shows. And I do not see quick recovery for the large cap segment for a variety of reasons, whether it's the consumer end of the market, the banking end of the market, or the IT and the pharma end of the market. I think largely large caps are not looking good. They were not looking good even prior to this announcement. Post this announcement, they're looking terrible. But I continue to believe that small caps, micro caps are still excellent places to be in. But that's not to say that they can't fall 10, 20% more. I mean, they are like pieces of paper being tossed around in a tornado. I mean, they can go anywhere. Let the dust settle down, and then I'm sure a great deal of value will emerge. And I can already see that, But to say that be brave and go and put all your money in, I don't think that's a smart thing just yet.
So what is the advice to long-term investors now, Shankar? Because traditionally we are taught by experts that, you can find a lot of opportunity during adversity, but of course, we don't know when this dust is going to settle and how long it's going to take. What's your advice to long-term investors now?
No, I think, again, very few people sit on cash at bottoms of the market, and most people are fully invested, so there's very little deployable cash. But my sense is, like I said, stocks in sectors that I like. For instance, infra, I think, will be relatively unscathed in this because, rates will decline because of obviously poor, a lot of deposits coming in, is very little credit growth. So I think that sector is still a good place. I think exporters are still very good place. So I like chemicals, and chemicals is by and large an exporting sector. I think the rupee is going to depreciate in line with other EM currencies, and in particular because of this issue. So I think broadly the micro cap areas that where I have liked, I think that broadly the story still remains intact. If anything, is a little better now. But that's not to say those stocks can't fall 10-20% from here. I mean that all bets are off in such situations. So today to say that look, it's a great time to buy, I think it's a great time to buy a little bit. That's the only thing I can say.
Okay, so maybe buy some now and be ready with more cash if the market gives another better opportunity, maybe sometime down the line, Shankar.
Yeah.
Okay.
That's my view.
You spoke about exporters, but in that you are very clear that that will not include IT, because that was your other big call, which has actually worked out pretty well, that the business model itself is at risk. So no point talking about rough valuations there.
Yeah, I mean, like I've always said, I'm not a big fan of valuations. I mean, I don't believe they work at all. You can justify 5 times earnings for anything. You can justify 500 times earnings for anything. So, it's just meaningless to talk valuations.
Okay.
The real issue is IT unfortunately now doesn't benefit much from a falling rupee, because your top line itself is under pressure. So even if you have a 3-4% fall in the rupee and you're looking at a 3-4% contraction in your top line, net you're where you were, and that place where you were wasn't looking very good even prior to this announcement. So I think IT is still in trouble. I think pharma is still hurting. So I think large caps, Anuj, I've said this many times, and again, if you think about it, Nifty, Sensex, flattish for nearly 2.5 years now. But, small caps, micro caps have been a complete, outlier in that sense. So the tape itself is telling you, don't even need to call me. Just look at the tape and the story is very, very stark.
Okay, so, just one final question from my end before we let you go, Shankar. I'm sure the government is taking cognizance of the kind of slippage that we've seen in consumer demand, the wealth erosion we've seen from the stock markets ever since their move. What do you think the government should do now, or what do you think the government can do now to sort of offset the damage that we've seen already? Someone earlier was suggesting that they should immediately come out with this fiscal stimulus, sort of cut petrol prices, cut excise duty to offset a part of the damage. But what would your assessment be?
Look, I'm not qualified to make such high-level assessments. I think all these things should have been modeled for. I mean, that's the way, if I were sitting in a position of authority, I would have definitely modeled for a lot of this. I mean, none of this is really unexpected if you thought about it very, very rationally and you looked at the data surrounding, all such moves across the world. So, I mean, that deed being done, I think what I'm hearing is, income tax might go altogether. Jan Dhan accounts might see, a large amount of money being deposited, maybe 10,000-20,000 rupees per account, for certain levels and below. All that are palliatives. I think you have to distinguish between wealth and income. I might give you a lakh of rupees today if you're hurting, but if your going concern thing itself is in a question mark, then that 1 lakh rupee doesn't help. See what I'm saying? If you lose livelihood, your livelihood takes a big hit, then giving you, a one-time gain, is just like, just like a drop of gasoline on a hot day. I mean, that it just evaporates. So my real fear is that will get hoarded, that will not get spent. And when people enter crisis situations, they end up hoarding money. They don't end up spending that money. That ripple effect will remain for a while. I mean, I don't know how long that remains, maybe a quarter, maybe 2 quarters. But people will be reticent to part with any stimulus that they are given. That is the real question here. In crisis, people curl up. People don't expand, whether it's an individual or a business.
All right, Shankar, fair enough. Thanks a lot for your time today. So that's the big call from Shankar Sharma, that he still believes that the mid-cap and small-cap is the way to go, but don't put all in right now, all the money. Maybe you can buy some 10-20% now, and if the market corrects more, maybe you could look to accumulate. We'll take a break on that note. Our closing bell money control question of the day is on demonetization. Do you see normalcy returning at the end of the 50-day deadline? Log on to moneycontrol.com and post your responses, and we'll read out some of the most interesting ones post 3:30.
Also coming up next, to brighten up our Monday, we need a bit of that. Our Monday special Mid-Cap Mania with Nigel D'Souza, and the company on his radar is a pharma stock that is primarily into the manufacturing of APIs. More details on the other side.